Imagine owning a tiny piece of companies like Apple Inc., Amazon.com Inc., or Tesla Inc. Every time those companies grow, your investment could grow too. That's exactly what the stock market allows people to do. In the next 3 minutes, I'll explain how the stock market actually works in the simplest way possible. What a stock is. Punkt. A stock represents ownership in a company. Punkt. Think of a company like a pizza. Punkt. The pizza is divided into thousands or millions of slices. Punkt. Each slice is called a share. When you buy a share, you own a small piece of that business. Punkt. So if the company grows, earns more money, and becomes more valuable, your share becomes more valuable too. Why companies sell stocks? Companies sell shares mainly to raise money. Instead of borrowing from banks, they allow investors to buy ownership. This money helps companies build new products, expand into new markets, hire employees, invest in technology. When a company sells shares to the public for the first time, it's called an IPO, initial public offering. After that, the company's shares can be traded on exchanges like the New York Stock Exchange and Punkt Nasdaq. How stock prices move. Stock prices move because of supply and demand. If many investors want to buy a stock, the price goes up. If many investors want to sell, the price goes down. Punkt. Prices change based on things like company profits, new products, economic news, interest rates, investor expectations. Sometimes prices move not because of what a company did today, but because people believe it will grow in the future. How investors make money. Punkt. Investors usually make money in two main ways. Punkt. First is capital gains. Punkt. That simply means buying a stock at a lower price and selling it later at a higher price. Punkt. For example, you buy a stock at $100. Punkt. Later it rises to $150. Punkt. Your profit is $50 per share. Punkt. The second way is through dividends. Punkt. Some companies share part of their profits with shareholders regularly. Punkt. So just for owning the stock, you receive cash payments over time. Why long-term investing works. Punkt. Many successful investors focus on long-term investing. Punkt. One of the most famous investors, Warren Buffett, built his fortune by buying strong companies and holding them for years. Historically, the stock market has returned around 7 to 10% per year on average over long periods. That's why many people invest for retirement, wealth building, financial independence. Closing. So, in simple terms, the stock market is a system where people buy and sell ownership in companies. When those companies grow and succeed, their investors grow with them. And that's how the stock market actually works.